Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, seems like we're climbing up yet again. 24,800 is back with us, 143 points up in trade. All the sectors are hunky-dory. You can see the real estate, which is the top moving sector now, 1.6% higher. Pharma, autos, IT are also up in thick action right now. Barring say the consumer durables, rest all of the sectors are actually up and about despite the volatility that continues to remain unabated. The top movers on the Nifty remain BEL as the top mover, 5% higher right now, along with Cipla, Bajaj Finserv, Tata Steel. You're seeing these as the top movers right now. On the downside, however, you see JSW Steel, Coal India, Kotak Mahindra Bank, Power Grid, IndusInd Bank as some of those stocks that are still reeling under some pressure. But even the PSU stocks are up on the F&O space. Some earnings related stocks that are buzzing. Solar Industries, for instance, along with the defense maker BEL. So we'll focus on a whole host of stuff. Let's welcome our guest on board. We have Mr. Sharad Awasi joining in. He's the head of research at Smiths now. Warm welcome to you, sir. Always a pleasure to have you with us. A lot has happened from the time that I met you and spoke to you last time on air, especially, with the kind of recovery in the rally that has taken place over the last 1 week. Defense and railways, how they have bounced back again. FIs, again, they have been selling yesterday. They've been buying all before. So it's been crazy there. Geopolitical tensions continue on the far side. And of course, we do see FTA, US trade talks continuing as well. So there's a lot of things that we need to navigate through. First up, tell us, sir, after the recent recovery in the markets, are you further bullish on the recovery rally, or do you believe that this is it and all the good news is priced in?
Uh, no, I would not say all the good news is priced in. Maybe some pockets you might have run up a bit too much of beyond the comfort zone that maybe it would be hard to make money over the next, 18 to 24 months on some of the spaces. But I think the broader market still have leg room to go higher. In the large cap stocks, we can see a lot of stories that seem like very attractive even at current valuations. In the mid cap, small cap space, also, I think there has been some good carnage in a lot of stocks which are presenting a very good opportunity. Some recovery has happened from the lows, but I think we are not even talking of median value in most of these companies. So I think, yeah, maybe some specific spaces might be a bit stretched for that also only for the shorter term of, 18, 24 months. Beyond that, the outlook, I think for most companies should be good. And generally regarding the economy, I think first quarter, second quarter, first quarter perfectly should be much better than what it usually is. So once these first quarter numbers start rolling in post June, I think there is a high probability that some re-rating would happen to the full year numbers also. And beyond that, barring Q2, I think most of the quarters this year should be very good in terms of consumption demand, etc. So I think this is still a very nascent stage of the rally that we should see over the next, 1.5 years.
And now, Sharji, help us understand about some of the pockets, defense and railways. What are you thinking right now after the recovery rally has taken place and then some profit booking too? What's your fresh approach on these two spaces, sir?
I again, this is the space that I'm talking about. I was talking about that maybe 18 to 24 months forward, most of the numbers may be very well discounted.
Yeah.
Because both are high gestation period projects, they might take a bit longer than just the order book converting into execution. And there could be fallouts also, some deals getting cancelled, etc. All that can happen. So I think it is a bit challenging there. Maybe over the next 18 to 24 months, it might be hard to make money. But at the same time, if you look at the order wins in HAL, the size of the orders that they have won, and the type of mode that these companies have around them, I think for new companies to come in and challenge their positioning would be very difficult. And the offset clause would keep helping them. So I think order book swelling is something that we'll continue to see. Initially, when around 2 years ago we started talking about it, we were talking about order book swelling by 2-3 times. I think with the exhibition that has been done of the various domestic developed products in the recent situation, I think there is a high probability that a lot of export orders will turn around, and that could substantially aid your order book growth. But at the same time, all that will not convert into numbers, maybe over the next 18 to 24 months. So 18 to 24 months roughly seems largely discounted for most of the defense as well as maybe railway stocks. But again, for railways, some companies, if they get some of the big international orders for RVNL rights, I think that could be a turning case. But at current prices, I think they might be fairly squarely valued for 18 to 24 months.
Okay, got that. Within defense, sir, have you spotted any fresh stocks to really look at, or are you building onto your earlier chosen stocks? I mean, the rally that we've seen on HLBL, on Cochin, GRSE, Mazagon. How are you really looking at selecting some stocks from this pocket, sir?
Particularly if I want to play on a safe bet, we are concentrating more on HAL. I think HAL remains the safest bet to
Okay.
play. And regarding complex engineering, it could have the largest moat as well. In case some developments happens regarding, Tejas, etc., I think that could be an additional trigger for them. And the order book acceleration we have already seen there, though particularly valuation wise, you can't be very comfortable. But I think for these stocks to get 40, 45 times would not be very difficult with the kind of growth we are talking about. So HAL is the best bet if you want to go with a safe large name. For the smaller companies, I think something like a Centum Electronics could be very attractive over the long term. Idea Forge on the drone side had corrected a lot, has recovered a bit, but I think still lower from where I had recommended it earlier. But I still believe that that's a very interesting story to play out, So I think Idea Forge could be one story if you want to take a bit of adventurous risk and you can spread your horizon a bit longer, beyond the initial 12-month usual kind of period. I think that is a good story. And on the other side, I think BEML as a diversified story seems like a good for targets of around 4,000, 4,100. Though I believe it's gone up a bit, so not much upside left. So these are the three core ideas largely we are trying to focus on. On the shipbuilding side, I think most of them should benefit out of the developments against Chinese ships. How this pans out, it could be very interesting for that space. So, there also the order backlog could substantially improve from here. Because prior to this rally, we were just building in for most shipbuilders a very, a normalized kind of earnings growth over the next 2 years. But now there is a probability that the order book could swell and they could really work harder on executing faster because of the restrictions on Chinese ships, etc. So how that plays out, something you would want to see. But again, they have run up a bit over the last, 10, 15, 20 days. So it makes it very difficult for you to place fresh bets on these. But use those dips. If you get some dips, I think you could still get into these ideas, particularly Cochin and maybe GRSE. Mazagon hasn't corrected much and is in top of the line. So I think the submarine kind of orders getting converted will take a much longer time. But the shipbuilding ones, particularly GRSE and Cochin, I think if you get a dip, they could be good ideas to bet on.
Fair point. Now, Sharat ji, help us understand something that I was marking in my opening commentary on the FII flows. How are you reading into this erratic move? I mean, after having consistently bought in the month of May, yesterday a sharp sell-off of 10,000 odd crore rupees. What does that reflect? And again, seems like today again could be a positive figure. So, what exactly should one make of what is happening on the FII flows front, sir?
I think yesterday could be a one-off. I think COVID is something which is very fresh in our memories. Um, Sadly, most of us have lost someone or the other near dear to us during COVID. So I think even the slightest mention of it creates, ripples across the board. So I think part of yesterday's sell-off could be because of that event also, and the Russia-Ukraine tensions are not dying down. Maybe something was happening in Israel, Iran. So uh, over the last 1 month, we were talking about these geopolitical situations dying down, and now on top of it we have another problem which is resurfacing, so people are not sure how to react to that. The mortality rates are not still high, so I don't think it will be that big a problem, but yeah, it is something that we have been habituated to being scared of over the last 4 years, the type of impact that we have seen. So I think largely it is a mix of all these three things that caused it yesterday. And whenever there is a risk of, obviously money will flow out of emerging markets. So I think take it as a one-off. I think normally your funds flows should be positive for you because the dollar is depreciating vis-a-vis major currencies. So ideally this is a situation, and a lower interest rate regime is more or less there globally. So largely it should be positive for flows into emerging markets, and India obviously should remain a preferred choice over there.
Okay, fair point. Just let's discuss few pockets more, sir. IT is something that I wanted to touch base upon. Why? Because just this week we got to know that the downgrades happened for US, and one of the key reasons that we thought that IT was suffering was again on the back of uncertainty as to how US economy will grow since such downgrades are coming in. What's your sense, sir, on the IT pack? Large part of the earnings are out. We have seen their own share of bump up in the recovery in the stocks on the back of earnings that have come in. But what next is the question now, sir?
I think over the next 1 or 2 quarters, you will hear a more positive commentary from most of the IT companies. This quarter, they were when they came out with the quarterly updates and the con calls. I think the whole world mood was in shambles, particularly with respect to what's happening in US, and the tariff situation was pretty out of control then. I think next quarter when they come out, with their outlook, etc., they would have more settled ground under their feet. So most probably the forward commentary would be very heartening. Regarding US recession, I think yeah, you can occasionally crib about it, but an economy growing at 1.5%, I think growth is not what is very material with respect to US. So I don't crib too much about it. It's like a company with a PAT margin of 1.5%. Any point, any expense going haywire, it could go against them. I think lower interest rates, the trajectory that is settling in is positive, considering the type of debt they have on board. Occasionally, you will have these shutdown kind of stories regarding US, and there will be a lot of hype and hoopla that the US is going to shut down this, that. We've been hearing this for now, 4, 5, 6 years continuously, every time the shutdown date comes in. But I don't think it's very material. You should be very bothered. And the other thing that has played very well for IT internationally post COVID is that it is not now limited to the larger players. The advent of AI also opens up usage and adoption of IT at the much lower level or in the mass level companies. I think that is substantially important. In India also, we have seen that change happen. Globally also, that is happening. And Indian companies have also focused more on the consultancy part of it, which they were not doing earlier. So I think a lot of changes has happened. Maybe not just running a sweatshop. These companies are going to grade up to a different level. Though there are a lot of uncertainties how AI plays out, what it does to your programming work, etc. But I think largely it is positive. The adoption is more larger in scale this time around globally. So that should help most companies. And regarding a US recession, I think it would largely be a technical recession. It's not a full blown recession. In the rating cut, two rating agencies had already cut it. This is the third one, so it's largely a formality being completed. Though a lot is read into a lot of what rating agencies do. But I think the kind of debt that US is having on the balance sheet right now, uh, it is very hard to fathom a way out of that. So that problem is there, that will remain there. Japan has been dealing with that problem for the last 2 decades now. So I think you never know. Large economies, they could behave very differently. They have a problem of their own, but I don't think it's very material. Short-term gyrations here and there on the markets can happen. So on balance, I think IT, the next quarter commentary should be good. Valuations currently are favorable, and I think with that growth coming in, I'm not very worried about a US recession. Mass adoption is much larger, so IT should do better in the long term. I think use the dips to accumulate these stocks.
Okay, good, got that. Now, apart from IT, sir, let's talk about pharma, which has again started to show some signs of reversal. We are seeing not just the large caps, Sun Pharma, Dr. Reddy, Cipla, but even the diagnostic names, the healthcare names also come up in trade. The mid-cap pharma names come up in trade as well. Are you looking at any fresh triggers that could be auguring well for the space right now? Are you looking at this space once again?
Uh, Not particularly the whole space, but I think, yeah, biosimilars, biologics is something that is very interesting for the full pharma space, because the type of, treatment that you can do to autoimmune disorders like a psoriasis or something, it is very different kind of achievement that you can do with biosimilars. And Biocon obviously has a leading position there. I believe even today they have got approval for some drug. So I think Biocon, obviously, if you want to play the biosimilar story, which should be the most promising space within pharma, I think, in terms of growth, etc., and new ways of treating problems which were hitherto considered untreatable, basically. So I think Biocon is one idea I'm looking at long term. I think the Vitaris acquisition should help them. On valuation comfort, I think I would be very comfortable buying a Dr. Reddy at current prices. Cipla, Sun Pharma, I think valuation wise, I don't see much upside left. And in case there is some stringency on the US regarding prices, maybe there could be some adverse effect on Sun Pharma. So I'm not looking at it. But if you want to take a bit of smaller names, I think Alembic Pharma is a good name for around 1100, 1150. That is what we are working with. Maybe if you want to take some risk and want to look at a multi-bagger idea, though they were recently involved in some IT raids, etc. Acum's drugs, I think that is one idea that I'm looking at. The type of long-term growth that they are talking about, if they can deliver, I think this could be a multi-bagger idea to look forward. So these are 4 5 names that we are largely concentrating on, not across the board. I don't think it's something that you have an across, but biosimilars is something that I feel should be something that you should look at as an attractive place to play on. So Biocon remains the best play.
Perfect. So I hope this has also given enough clarity to all our viewers who've been looking at pharma and asking more questions on pharma these days. Let's also talk about the metals pack, sir. We have discussed this story with you earlier also. But do you think the fresh trigger by way of China rate cuts that are coming in, how are these going to be playing up for the metal story as a whole back home in India? Especially with results also coming in. We've seen what happened with Hindalco. Even though brokerage houses still remain divided on that front. Just wanted to get a sense from you. How are you looking at some of these players, sir?
See, aluminum and copper, I think they might ward off a bit of the cyclicality because of the use in EVs, etc. But rest of the pack, I think the base metals, stainless steel, etc., steel, HRC, etc. I don't think that these valuation, many of the company offers you a very good entry point for a horizon of 18 to 24 months. If you want to buy into it and sit on it for longer, maybe a Tata Steel, JSW Steel might make sense because they have large capexes which will transform them into a different size. But other than that, I'm not very bullish on steel at these prices across the board, whether it's a SAIL, Tata Steel, JSW, JSPL. I think valuations are more or less fair and square there. Hindalco, even in terms of valuations, I think maybe there is an 80-85 rupee upside. It trades at 11 times forward. Then you might be looking at somewhere around 750. So that is one idea. Hindustan Copper is one idea I've liked for some time. I'm not sure at what valuations it is trading at. But I think the type of value addition they do, etc., that is one idea that I look at. But I don't believe it's very liquid. So Hindalco probably is a good idea you could look at. But the rest of the metal pack, I think maybe small companies here and there. But otherwise, across the board, I don't find it very interesting at these valuations.
Okay, fair point. One more space that's been on the buzz yet again is the erstwhile favorite real estate space, sir. That's again bouncing back. We're seeing after the results, DLF surge in trade. We've also seen what's happening with Lodha, for instance, or maybe even the smaller players on that front, Oberoi Realty, maybe Godrej Properties as well. What's the sense that you have here, sir, on the real estate pack? Is there room for some more upside, or do you think enough and more rally has already taken place in the last 3 4 years? So this is rather something that you'd like to just keep an eye out on, but not so much involved.
No, maybe I would not buy something across the board, but I think our view is very clear that real estate is going to be an attractive proposition if you are investing in India. The type of urbanization and per capita income increase that we are talking about, that should perfectly aid real estate growth. There is a lot of room for growth, whether in the metros or even in tier 2 cities. So I think as a sector, it certainly looks like a very promising sector if you're betting for 2 3 years. Regarding stocks, I think within the larger ones, DLF, obviously one of the larger players. If you want to bet on an available land bank, that remains a good choice. But in terms of valuation and the type of earnings they're expected to report over the next 2 3 years, I think the valuations are a bit stretched. Godrej now is starting to look, maybe you would start nibbling on it. So Godrej Properties could be a good idea to look at. On the larger players, I think the rest of the pack isn't really trading at attractive valuations, barring probably an Oberoi. Oberoi is at 20 times 1 year forward, so that looks like good. But I'm largely focusing on the smaller ones, something like a Keystone Realtors, Signature Global, or a Shriram Properties. I think these are ideas which could have very healthy growth rate over the next 2 3 years. And I think these are ideas that could easily double trading at 20 22 times at their earnings over the next 2 3 years. These are ideas which could double from here. So I'm more bullish. Even Godrej could give you a very decent upside from here if you're holding it long term. And Godrej is a combination, because they also have one of the best land bank parcels that they have, and combine that with excellent, building capabilities also. So I think Godrej is a good idea to look at these valuations. You can start nibbling into it, stagger it over a period of next 2 3 months, and wait for the next 24 to 36 months. That is a good idea that could fetch you 60 70%, and the smaller ones could roughly double over the next 2 3 years. So I think, yeah, not DLF, but Godrej certainly looks good. Oberoi looks good. Shriram Properties, Signature Global, and Keystone Realtors, smaller names.
Okay, fair point. I'll also come to certain pockets and specific stocks also, sir. Stocks like Zomato, for instance, Eternal is in focus for the last couple of days. There is shareholder approval for capping the foreign ownership now to 49.5%. There was some estimate going around that we could see a large amount of outflow because of that. How are you looking at Zomato post such news flows, sir? This used to be one of the key focus areas for us. Also, we've been tracking it very, very closely. But the stock has been stuck in a narrow band of trade. And what does this fresh news flow really mean for Zomato, sir?
I think typically when you are trading at peak valuations, there is any negative news can hit you very badly. It might be very small, and this is like flows, right? So in these stocks, largely what you're talking about is flows that are driving them higher. Valuations are anyway thrown a toss. So market cap to sales remains your thing. So I think in terms of valuations, you can't really comment much. But if this is going through and there could be negative flows, that is selling flow, there is high probability that this could correct further. So I would not be very comfortable, venturing into Zomato at the or Returnal at these valuations. Swiggy has corrected substantially. Valuation comfort is probably better there. So maybe if you want to take a bet on this space, you could bet a bet on Swiggy rather than Zomato. But at these valuations, I think with this overhang particularly, maybe it could see some more correction. So it's better to avoid for some time.
Okay, got that. Let me also just bring up some of the other pockets as well, sir. Especially when we talk about something that we've also discussed earlier, the capital markets related story, broking houses, names like CDSL. There is again a buzz around NSDL that's taking place right now. Still no clarity as of yet, but an IPO is in the works. We all know that. CDSL, Angel One, 361 WAM, Nuvama, Edelweiss, Motilal Oswal, all of these spaces are again bouncing back. BSE, CDSL. How would you navigate through these fresh bounces? Are you just going with select names here again?
Yeah, I think across the board, maybe the likes of BSC, MCX, CDSL, and even NSDL, as and when it lists, we don't know what price it will list in. But the buzz around is at valuations which are pretty frothy, and it's very
Yeah.
difficult to digest that. So I think not across the board, but maybe you could look at an IEX as a diversion within the exchange-based markets. And we are looking at that. Maybe that looks like an attractive bet. Supposedly most of the power issues, etc., and the dual exchange, etc., problems are solved. And the other things, I think Angel One, maybe valuations are not that frothy while we see the rest of it. So that is one idea that you could look at. But across the board, I would not be very eager to jump into buy into these stories of this likes of CDSL and STL, MCX, BSC. I think the valuations are a bit stretched at these levels.
Okay, got that. Now, apart from this, I also wanted to get a sense. This IPO ball is again started to roll. We've had two IPOs in 2 days. Borana Weaves yesterday, Bellrise today, and then today again we've seen at least price bands of three more IPOs being announced as well, including Leela Hotels, Aegis logistics subsidiary there. One more a company that's announced its price band too. So, how are you looking at this fresh wave of IPOs coming in? Anything that you're keeping on your radar, you're looking at, interestingly as well?
No, I think till now we have worked on Borana and Bellrise. I think Borana also looked like a decent bet at the valuations at
Okay.
which we're offering. Bellrise again is a first generation entrepreneur who has started from a very humble beginning and scaled it up to current levels. And most probably the capex they are doing, shifting into EVs, etc., and the focus on passenger vehicles and export markets. So I think the triggers are right, the succession planning is right. So I think Bellrise also could be an interesting idea. But both these ideas, I think you should invest keeping in mind that you might have to hold on to them for 18 to 24 months. If the markets are very in a good mood, I think, which we expect it to be, maybe you get some listing gain. Bell Rise might get more of it because of the management comfort as well. So unknown management, basically, people are more comfortable with that kind of branding. So I think these are small companies, but yeah, both look like good ideas. But extend your horizon to 18 to 24 months, you might have very good money to make on both ideas.
Okay, actually, a long-term focus can actually create a lot of money for investors who are looking at this IPO opportunity, not just for the listing gains, but in fact for the long term, there could be a lot of opportunity there. Lastly, sir, help us understand. We are in the last leg of the earnings season. So far, what has stood out for you in the earnings?
Largely this quarter, I think the BFSI space has been good in terms of vis-a-vis expectation. The numbers have been good, and I think with the NBFC relaxation, most probably next quarter also you receive good numbers from there. So I think two things would play out very well. NBFC relaxation and your lower taxes. So even Q1 could be good for most NBFCs and small finance banks, and the improvement, in MSME microfinance, that is also boiling down into very good numbers for these. So I think BFSI has been one space that looks like good after these numbers.
Okay, fair point. Well, Sharatji, thank you so much for being with us on the show. Always a pleasure listening to your wonderful insights that you always share with our viewers. Thank you. Hope you have a great time, and we'll see you soon on another edition of Market Today. All right, viewers, we'll start wrapping up. The markets now 3 minutes to go for the markets to shut shop. We are back above 24,800. Just a matter of time to see whether we will close above that level or not. Remember, it's been very, very choppy off late, but we pulled up very smartly from around 1220 odd levels. And we are now ending the day with almost 0.3, 0.4% higher in trade, 0.5% up for the Nifty, 0.4% higher for the Nifty Bank. Barring consumer durables, all the sectors still hope to end in the green, with real estate, pharma, mid-caps, Nifty Next 50, PSU banks also up and about, autos, ITs, all the major sectors definitely holding up in trade. We've already marked for you the top gainers and the losers in the Nifty. But let me mark some for you on the FNO space. Angel One, Solar Industries, Siemens, BEL remain the top movers on the FNO pack. On the downside, you have Dixon Tech, 6% lower. Aditya Birla Fashion Retail, Pidilite and Max Healthcare as those stocks that have dragged a bit in trade. As far as the top gainers and the losers from the Nifty 500 basket are concerned, where smart moves are being seen, it's Tata Tele today, 19.9% higher. You have names like Akshar Chem, that's up 12% in trade. You also have names like Banco Products, 10% higher. JK Tires, after yesterday's fall, there's a smart rebound of 10.5%. Dredging Corporation is up and about 10% higher. You also have names like Atlas Cycles, a to Z Infra, IOL Chemicals, that's up and about in trade. Apollo Microsystems again from the defense pack, Balaji Telefilms and Z. So some media names also are cropping up in trade as well. On the Nifty next 50 names, Siemens is the top mover, 5% higher. HAL, BEL both have pulled up in trade. IHCL is also up and about, the operator of Taj Hotels, that's up and about. In fact, it's the hospitality space as a whole that's been buzzing. Apart from IHCL, you also have, say, Thomas Cook. You also have names like Taj GVK Hotels, Indian Hotels, Kamath. All of them are buzzing in trade. So the hospitality space is also in focus in trade today. And on the PSU space, apart from the defense makers like HAL and BL, you also have erstwhile fielders like PFC, REC coming up. Oil and gas stories also rising in trade. You can see all the three components, IOC, HPCL, BPCL up and about. Slight gains on the railway counters that even Sharatji was talking about as well. Well, apart from this, there are many other smaller pockets within the metals pack that's also buzzing in trade. So that's how the stocks are focused on the defense pack. Solar Industries is the top mover. You have Bharat Electronics, you have GRSE, Bharat Dynamics, Data Patterns. All of them very smart rebound after 2 days of losses is what we've seen. 117 points higher. 24,800 is with us on the closing edition as far as the Nifty is concerned. We'll wind up at that, but do stay tuned. Right after this, we'll be coming back with a special management interaction on the earnings conversation. Max Healthcare will be with us to understand the key earnings fine print and the outlook going forward. Stay tuned with us.
Russian troops shelled a residential area in Ukraine's Kherson with artillery, injuring 2 civilians on Tuesday. This non-stop Russian aggression defines Kyiv's skepticism about peace talks between Russia